What if I told you Trump just wiped billions off the crypto gains overnight?
Tonight's was the most difficult of them all, by far, and perhaps the most lethal. We will go after those other targets with precision and skill.
That is exactly what just happened last week. Trump dropped bombs and crypto crashed with them. Everyone is in full panic mode. And it's just one of many mind-blowing stories that we've gathered for today's weekly recap. So stick around till the end to understand where crypto might be headed next. Hi, I'm Steve from BeAWhale, and let's catch up on last week's most chaotic crypto news. BlackRock just made crypto history by buying over 3.25% of the total Bitcoin supply. That's about 660,000 Bitcoin, valued at around $70 billion. Forget the whales, BlackRock is the Kraken now. Why are they doing this? With such significant buying, Bitcoin supply becomes scarcer and scarcer. That will definitely drive up prices in the future, but it's not just the good news. This increased institutional control will most likely also lead to more market manipulation. And Bitcoin is all about diversity, right? Europe has significantly advanced its crypto regulation game by granting Coinbase and Gemini licenses under the new markets in crypto assets, MiCA regulations. These licenses allow both exchanges to operate legally and transparently across the entire European Union, giving millions of European investors safe and regulated crypto trading options. This clarity is crucial as it attracts more institutional and retail investors who previously hesitated due to regulatory uncertainty. With clear laws now in place, could Europe set a global standard for crypto regulation? Canada just dropped a crypto bombshell. They launched the world's first ever spot XRP ETFs called XRPP and XRPQ. Unlike traditional futures ETFs, these spot ETFs let investors directly own XRP through regulated exchanges, simplifying crypto investing for everyone. Following their release, XRP saw an immediate spike in trading volume, proving massive investor enthusiasm. This groundbreaking move puts pressure on other countries, especially the US, to follow suit. We are slowly bringing more and more spotlight to altcoin. Big news from Washington too. The US Senate has approved the Genius Act, a landmark bill regulating stablecoins. Stablecoins, cryptocurrencies pegged to stable assets like the US dollar, could soon become mainstream thanks to clear rules ensuring transparency and financial stability. This isn't just about regulation, it could revolutionize daily transactions. Imagine using stablecoins from Amazon or Apple to buy groceries or pay for online subscriptions. Major corporations might soon jump into crypto, drastically changing how we handle everyday purchases. This is going to be so big. The US Department of Justice is turning up the heat on crypto fraud, aiming to seize $225 million stolen via pig butchering scams. I've already talked about them in the past episodes, but in short, these are highly organized operations where scammers build fake online relationships with victims, gain their trust, and gradually convince them to invest into fake crypto opportunities. This aggressive crackdown is critical because it signals a stronger governmental stance against crypto fraud, significantly enhancing investor security and market confidence. Could these actions reshape the security landscape in crypto? It sure seems that way. If you're serious about building in Web3, don't go it alone. At BeAWhale, we don't just code, we strategize, design, and scale blockchain projects that are secure, scalable, and actually make sense in the real world. From smart contracts to full dApps, we help turn crypto ideas into living, breathing ecosystems. Want your crypto product to last longer than a market cycle? Well, let's build it together. Iran's largest crypto exchange, Nobitex, suffered a devastating blow recently. A pro-Israel hacker group stole around $100 million and leaked the exchange's complete source code online. Now, why is that alarming? With Nobitex's internal workings exposed, other hackers could identify and exploit vulnerabilities more easily, creating major security threats across crypto exchanges worldwide. This incident highlights the urgent need for stronger cybersecurity measures industry-wide. So just a quick reminder to never put all your savings into smaller exchanges and always do your research before putting money anywhere. Over the weekend, things got really serious. The US launched airstrikes on Iran, hitting 3 nuclear sites. This came right after a United Nations agency said Iran was breaking the rules on nuclear weapons. Israel hit back first, and then Trump jumped in, announcing that the US was officially joining the conflict. And just like that, markets freaked out. Investors hate uncertainty. And when war is on the table, they run from risky assets like crypto and rush into safer bets like gold or cash. And that's exactly what happened. Bitcoin dropped below 100K for the first time in over a month. Ethereum crashed nearly 10%. The entire crypto market took a hard hit. Now, predictions of World War III are trending online, so even if the worst does happen, just the fear alone is enough to shake up the markets. What now? If the conflict keeps heating up, expect more downside. But if it gets resolved, you can expect a sharp rise. Big investors haven't stopped buying as ETFs are still pulling in serious volume. The moment fear fades from the market, the bounce could be big. A couple of days ago, a massive data breach leaked 16 billion passwords online, potentially endangering countless crypto wallets. We advise you to immediately update passwords and enable two-factor authentication. CoinMarketCap suffered a phishing attack through fake wallet connection pop-ups. Several users lost funds, highlighting the need for vigilance and caution with wallet connection. Coinbase is working towards trading stocks as tokens on blockchain technology. This could revolutionize stock trading, merging crypto efficiency with traditional markets. Norway considers banning crypto mining nationwide due to electricity grid concerns. This highlights growing global environmental worries about crypto mining's energy use. Last week, the crypto market was in full panic mode. Prices dropped fast as global tensions spiked. While short-term uncertainty remains high, strong institutional interests and progress on regulation are keeping long-term crypto optimism alive. Smart money keeps buying, while dumb money is still too scared to do the same. Well, that's a wrap for this week's Crypto Breakdown. If you enjoyed this recap, hit that button and subscribe so you don't miss the next one. And if you've got any thoughts or questions, drop them in the comments. We read and reply to every single one. I'm Steve from BeAWhale. Stay sharp, stay safe, and I will see you in the next one.